It's been an interesting phenomenon seeing the rise in startup incubators and accelerators in the country in the recent past. We've seen a lot of them coming up. I could name a whole lot of them, but I guess you have been, as a founder, you have been to either one or two co-working spaces, an accelerator program here, an incubation program where you pitch, reverse pitch, and get investors and get help for you to win and launch out into the business world by yourself. The role of incubators in the startup journey is what we're here to discuss on this week's episode of TECHOVER, Africa's biggest tech conversation. My name is Brian Jojotieno, in NTV's in-house techie. You're right on time for the biggest and the best tech show in Africa. But first off, as always, the tech news of the week. This week, we explain the global market crash that affected, among many other asset classes, the crypto and forex market. Share markets around the world saw huge falls on Monday, with Japan's Nikkei sinking by 12% after questions over the health of the US economy arose. Fears over US recession have crippled global markets, triggering a share market rout that prompted investors across Asia, Europe, and North America to all unwind their positions. At the same time, the severe plunge has raised questions over whether investors are facing a historical share market crash similar to the global financial crisis or 1987's Black Monday, or if it's simply an overdue pullback after a stellar period of strong returns. The volatile conditions erupted after the US Federal Reserve hinted after its 31st July meeting that interest rates would soon be cut in what was initially seen as a stimulus for shares. But the gains quickly evaporated as investors reinterpreted the impending rate cuts as a sign the world's biggest economy was faltering. Several pieces of economic data, including manufacturing, durable goods, and crucially jobs and payroll data, raised questions over the health of the US economy, with a well-regarded thumb rule signaling a recession. This indicator, which is triggered when there is a rapid rise in unemployment rate, has correctly identified every recession since the Second World War. The S&P 500 lost 3% on Monday, while the tech-focused Nasdaq shed 3.43%. While both figures were remarkable, they were more modest than what the futures market initially pointed to, providing some relief to traders and raising hopes the sell-off wouldn't turn into a full-blown meltdown. Shares, stock markets, and indices that had risen the most tended to fall the farthest. Chip maker Nvidia, which has led a period of robust returns for the tech sector, was down by as much as 15% at one point on Monday, before halving its losses, while Bitcoin also fell sharply. Australia's share market suffered its worst day since the onset of the pandemic, erasing more than $100 billion in value from local stocks in a single trading session. But it was Japan's Nikkei which came under the most extreme pressure, plunging by 12% on Monday before rebounding strongly early on Tuesday. Investors have been concerned about the state of Japanese economy and the recent effects of a strengthening yen, which has unraveled the so-called carry trade, in which investors borrow cheaply in yen and buy higher-yielding assets, including the US dollar. Analysts had warned that the yen carry trade was unwinding, triggering margin calls and forced selling. Online trading firm IG said that it suspected the frenzied market action in Japan was the final act of cleansing of long positions in the Japan trade, referring to investors who were caught up in the yen carry trade. Some safe haven assets such as bonds proved to be among the few hiding spots from the turmoil, with the sharp moves challenging all the sure bets of the recent months. That upbeat sentiment had been underpinned by optimism about AI technologies and the wider tech sector, along with expectations inflation would cool, job markets remain robust, and economies emerge from the inflationary period intact. While it's too early to tell whether the selling pressure will abate, at the very least, the sharp fall are a warning shot. The global recession concerns of recent years have been tied to a fear that cost of living pressures will eventually depress spending to such an extent that economies will shift into reverse. One canary in the coal mine investors look into America's online furniture and home goods company Wayfair, which warned that Thursday the customers were very cautious after recording a near 25% fall from peak spending levels recorded 3 years ago. And that's our explainer this week. Very well then, now you're up to speed with what's been happening in the tech world. I'm interviewing Alan Mwangi for the second time, but in different platforms. Alan, good to see you. Thank you so much for making time for us on NTV. How would you describe an incubator?
There are several different programs in the ecosystem, and I think there's entrepreneurship courses, there's incubator programs, and then there's accelerators. And so I think for entrepreneurship courses could be something that you might even take in a uni or elsewhere. But in terms of incubators and accelerators, where they tend to get mixed up, incubators are a little bit more on the foundational process for businesses and don't necessarily need to include tech businesses, right? You can have an incubation for agri-tech or agriculture-based companies, right? And for agriculture-based companies, they don't necessarily need to involve any technical aspects to it in terms of SaaS or coding or development. And that's where you can kind of get them mixed up. Whereas an accelerator is usually largely based on the tech and SaaS and infrastructure side. And the drastic difference, I think, is also time. So an incubator is not necessarily time bound. Whereas with an accelerator, this is a cohort-based course. It's 3 to 6 months, and it's very learn by doing kind of approach. And so the whole point is to accelerate them through that.
How different is an incubator from an accelerator program?
So an incubator is kind of like, they're going to give me a bit of a space and a little bit of support, but there's far less programming, and it's more, what are the inputs I can give to a group of businesses that is high level in terms of value, and they can just kind of leverage and use that. And again, it's not time bound. So let's say if the government has a incubation program for medical startups or medical companies, you can kind of go there and maybe start your pharmacy or your clinic, and you're kind of given a space to maybe meet with other guys and have those conversations. But there's also not going to be very much programming in terms of like master classes or access to advisors or access to mentors, typically in an incubation program. Whereas now with an accelerator, it can be sector specific. It can be also have a specific speciality to it. So it can be gender focused or industry focused. And within that, the resources you're going to get is typically a space, an accelerator space like this, access to mentors and advisors within a particular network, and then also access to funding. There's a different funding structure, which I think is the most important difference. Very rarely are you going to get funding from an incubator, whereas with an accelerators, you can get equity financing, you can get debt financing. It's various levels of funding structures that you can look at.
We've seen a sharp rise in this incubator and accelerator programs coming to Africa, facility and non-facility based. And by facility based, I mean guys who've come up and set up like a whole floor or a whole building or structures, and even real life examples of business environments. What is it that these incubators are seeing in Kenya, and why is there that euphoria to build as much incubators as possible to help startups?
Right. I mean, I can't necessarily speak for everybody, but I can maybe speak from sort of our perspective and how we kind of see it. So the overall mission at ALX is to empower 3 million ethical and entrepreneurial leaders by 2030. And I think we're very well on track to doing that. And our approach is very different, right? We have to think about the fact that we are the youngest continent on the planet, and that's only going to increase, right? We're looking at a future where you're looking at 2 out of every 5 children that are being born is going to be an African child, right? And so you need to think about where these guys are going to work, who's going to feed these guys. Like, we have very real problems on the horizon in terms of a youthquake that's on its way. So there's only, and then you also look at the standard of like how our economies work. Like, our economies are not top heavy with jobs, typically, right? Like probably 85% of Kenyans are probably either self-employed, right? Or, are really struggling and trying to find their sort of daily bread in that way. So not everybody's going to be employed. So what we looked at it was like, we can train all these guys as much as we want to. We can only fill them into so many jobs. What we need to do is help them create jobs, right? Hence the idea and thought process of all these accelerators, all these incubators that you're looking at, because these guys are looking at the 2, 3, 400 million that are on their way. And we need to figure out how we're going to give them jobs, how we're going to feed them, and what we're going to have them do in terms of being valuable, in terms of productivity to the market. So now you have all these programs, whether it's external or even local, who are like, okay, how do we take these cluster of specific companies or a specific class or cohort of startups, give them all the support we need, and help them generate jobs, etc.
Great. Now, from a founder side, and you've been a founder before, what shouldn't startups expect from startup incubators?
They're not gonna hold your hand. They're not gonna hold your hand. You got it. Like, yeah, you've got like, and this is why I said it's like a learn by doing culture, right? They're going to support you, and they're gonna guide you and push you in the right direction. But I can't take you to Naivas and do the shopping for you, right? I can support you and put you in positions that are going to help you prosper and benefit and answer the questions that you're trying to figure out. Because really, especially at this early stage, like everything that you think you know about your product, your market, and even your customers are really great assumptions, right? They're guesses at the end of the day. It's hypothetical. And so I'm a big believer of a desk is a very dangerous place from where to see the world. It's a very dangerous place from where to see the world. Get out of the building, right? So I think it's incredibly, incredibly important for them to also realize and understand you're not coming here to sit on a laptop, do some fancy PowerPoint slides, learn how to pitch, and then go stand up on stage. That's not what we're doing, right? You have to learn by doing. So that is getting out of the building, whether that means running out into CBD, going into the outskirts and talking to customers, coming back, getting that feedback, and iterating very quickly on that. So we're not going to hold your hand. That's the first thing they shouldn't expect. And then two, just because you've entered into an accelerator, right? Whether it's a big branded one like Google for Startups or Techstars or Y Combinator, like some of these international ones, it is not an indicator of success. Just because you got into that doesn't mean it's a business that's actually going to take off, right? And I think there's a lot of, unfortunately, like it's just the reality of our field and our sector, but there is a lot of hype, I think, about, oh, I got into this program, oh, I got into this particular accelerator, like, oh, I've got this, kind of brand, like in terms of backing. And I think they really, really need to remember at the end of the day, it's about building a proper, sustainable business that actually provides value to customers and users.
Do you have any success stories off of your accelerator program, and how's that looking like for them?
So our program is quite young, but I would say one key one is probably what's a product called Atris, which has been put together by Lavender Barike for Pulse Insurance is the name of the company. So she's got kind of two sides to her product. One aspect is using satellite imagery and aerial imagery to be able to capture and get insights on individual parcels of land for smallholder farmers. And then taking that same data and insights and being able to leverage that to work now with insurance companies to be able to give them an agri-insurance product, right? That kind of helps them bridge the gap through these cyclical seasons for agriculture. Lavender is not only someone that has come through our ALX programs in terms of like ventures through our Founder Academy and our accelerator, but she's also done our software engineering course as well. So she went and did her undergraduate and master's, came in, did our software engineering course, then came into our Founder Academy and the accelerator, came out of it. She has currently worked with over 3,000 farmers, has already gotten her insurance license, and also has raised $75,000 to date. And this company is about a year old, right? So I would probably say that's one of our more recent success stories. We're hoping to do this obviously a lot more at scale, right? So typically in an accelerator, you're going to have 20, maybe 30 startups, and that's even quite sizable for an accelerator. The accelerator that we have launching this month, at the end of this month, is 50 startups. So it's quite a big cohort, but but we're also looking very much at the ability to do this at scale. And we're hoping that through the volume that we kind of have, we're also going to have a greater selection of startups to be able to fund at the end of this accelerator.
Lastly, Alan, we know incubators as impact driven, and some may be for profit, and that's not a problem. But really, what would you advise someone who wants to put up an incubator in Kenya, in Africa, in the larger sub-Saharan area to look out for in terms of the kind of startups they're looking out for and what they want to achieve with those startups in the market?
I think especially for the impact problems, I think they very much need to understand that it can't be a one-size-fits-all model, right? I think our problems are very unique, not only as a continent, but also in each individual country, leave alone region on the continent, right? So that's the first thing I think they need to pay attention to and look at. Second, I think is we can't look at and focus at innovation for innovation's sake in this market, right? So a lot of people like to look at Silicon Valley and, you know, try to aspire and say like, oh, Silicon Savannah, which is still true. It's still a great model to look at. But here, like, we don't necessarily need unicorns, we need elephants, right? Really, really big businesses that serve the bottom of the pyramid and solve very real problems. And so when you're looking for startup founders, especially who are going towards impact and towards social values and social startups, they need to be thinking about not just the top layer of a problem, but even down to the infrastructure layer of some of these problems, very granularly. And especially here where, as much as I want to do, let's say, Uber for logistics, right? Great concept, B2B, like, you can book your freight, whatever. If I don't have the roads to do this, doesn't really help me, right? Or doing deep e-commerce in rural, right? For example, if I don't have the infrastructure where people can access internet or an interface where they can shop such products, it gets much more difficult to really be able to build and continue to create value. So I think for them, they need to look at, okay, who's working on the ground level? Who's building the foundational infrastructure areas for us to be able to build other businesses on top of to create that value now and social good is what I think they need to be looking at.
Thank you so much. All right, and that's the conversation on the role of startup incubators. And now you know as a founder what you shouldn't expect off of an accelerator or an incubator program. A good point to end the first section of Takeover. We take a short break. Don't go too far. Welcome back to Takeover, Africa's biggest tech conversation. Time now for our founder this week, and this startup is one that is based off of civic education and public participation, especially in the wake of this Gen Z uprising or revolution, as you may call it. Time now for our startup this week. Here is Uamuzi. In the recent past, Kenya has seen a youth uprising that has brought to the fore a rarely used constitutional right, that of public participation.
Just like the other research institutions in Kenya.
Public participation is about actions a person or group takes to get involved in issues of government or community that are of concern to them. It ensures that citizens are heard and can actively participate in decision-making and impact their needs. All citizens in Kenya have the right to participate, and it is their civic obligation to engage in all county governance processes. However, due to various challenges and shortcomings, public participation has not been properly achieved in the Kenyan lawmaking process, and as such, led to a disconnect in how laws are passed, with various facets feeling underrepresented or not included at all. Elvis Sitati and team have been working on Uamuzi, a digital public participation platform, since 2016 to help give the Kenyan youth a chance at governance affairs.
The reason why we started this project is because Kenya, we are fortunate and blessed to have one of the most progressive constitutions, not only here in Africa, but also in the world at large. Public participation, that is in Article 10, access to information, Article 35, and freedom of expression, that is in Article 33. They're all enshrined in it. For as much as we live in a time where technology has dominated the world, it's unfortunate that when you talk about public participation, we still have to meet in person for us to be able to deliberate on issues. And because of this, very few people get the opportunity to participate in such discussions. This is because of barriers such as distance, time, age, gender, disability, culture, political party affiliation, among other barriers. Two, these conversations are not meaningful, they're not well managed. Three, the people who get to participate in such forums, whenever they leave and go back to their homes, when they tell people what was discussed, the information gets distorted as it moves from one person to the other. And at the same time, we have people who are shy. People cannot freely express their thoughts in front of people. And that's the reason why we decided to come up with a digital tool, a platform that, one, we can be able to give young people a safe space where they can freely express their thoughts, their ideas, and their concerns amongst themselves and also with the elected leaders at their convenience. Two, they can be able to access verified and credible information on time for them to have a meaningful engagement. And three, where they can freely express their thoughts, their ideas, and their concerns.
Being a non-profit organization, funding its operations remain a key role in ensuring smooth running of operations at the budding impact startup, with subscription fees as the first stop in ensuring operations do not stall.
We have a business model where, one, we are making money through subscription fee for leaders. So when leaders sign up, they'll be paying an annual fee based on their positions, ranging from 20,000 to 100,000. Two, we're also making money through sponsored advertisements. You know, right now, the world has transitioned from traditional media to new age media. And now that's where now advertisements are being done. Three, we're also making money through surveys and polls and also through direct messages. So when leaders want to send direct messages to their constituents, all they have to do is just write the message, and in our own platform, we'll be able to disseminate this information.
Elvis insists that Uamuzi is the panacea to the accountability and civic education challenges that the citizenry goes through in every election cycle.
The first time we developed this app was in 2016. I got an engineer, a freelancer. I gave him my idea to work on it, but along the way we realized he never knew what he was doing. So in 2017, I decided to start all over again. So this time around, I got very good engineers from University of Nairobi. They were fourth years, so they came on board, they did for us the app. We were able to launch it in 2018, and we used it all until 2020. So we had more than 5,000 users, we had leaders who had signed up. But the challenge that I had was, when these guys finished school and when they dispersed from the institutions, they started doing their own projects. So the engineers who remained, all they had to do was just to maintain the app. But you see the whole essence of social media, when you wake up and you see that I've tweaked something on the app, even you as a user, you feel happy because it brings out the user experience. So I realized that I didn't have engineers. So what I decided to do when I started all over again now this time around is I decided to build my own engineering academy. So I have a team being led by my lead engineer called Anthony Gakuru. He's a very good engineer. So right now we have our own in-house team. So they were able to work on the platform. Another challenge that we had is we also didn't have resources for us to be able to do this because, working on such a project is very expensive. So early last year, Microsoft came on board to support us. So they are supporting the development of our products. So they gave us tools, which now made the development of our product very easy. And now we are just happy that we are engaging with many other partners who've now at least shown interest. They've come on board. And you see, the time we were failing in 2020, social media was not big. And for me, selling this idea was a very hard, it was very hard for me to sell this concept to people because people never really bought. They really never understood what we were doing. But during Corona time, that's when social media blew up. And that's time people realized the beauty about having digital tools to be able to bring every single person's idea into the decision-making table. So when we started all over again, at least now it was easy for us to sell this concept. 2022, we were featured by UNDP as a youth-led initiative promoting peace in Kenya. They featured us on their focus note. And just early last week on Monday, we were able to sign an MOU with the European Business Institute of Luxembourg. where they have offered us 5,000 scholarships to give to young people in Kenya, fully sponsored, just as a way of us being able to create, to empower young people and just to bring out the civic education aspect of it, because civic education is one of our pillars that we are trying to promote as an organization.
The biggest scare in the citizenry's quest to get accountability is victimization that manifests in torture, intimidation, and in worst cases, even forced disappearances. Data protection and handling becomes a key aspect of their business to manage sensitive user information.
With what has been happening, we've seen changes that has happened in the government, and I'm happy that right now the president has called for dialogue, but you see, dialogue cannot be just a one-time thing. Dialogue has to be a continuous process. So for us to have this platform, we want the engagement to keep on going. And the beauty about this platform is the engagement is going to be decentralized all the way to the grassroots. That is the ward level. So in our platform, the way when you sign up, you put your county, your constituency, and your ward where you registered as a voter. So automatically, we group you in 4 groups. So at the ward group, you'll be able to engage with the MCA. At the constituency group, you'll be able to engage with your area MP. Then at the county level, you'll be able to engage with the governor, the senator, the women rep, and the president. And now the national group where you will be able to engage on national matters. So I'm happy that right now with the current social platforms that are there, you know, it has given us a platform where we can have a national engagement. But now with Wamuzi, now we are going to decentralize this engagement all the way to the county levels. So with this, we want to engage with the leaders to see what they're doing. We want, even when you sign up as a leader, one of the requirements is you have to upload your manifesto. Because now with the manifesto, we want to keep our leaders accountable all through their time in office. Because unfortunately, when you talk about transparency and accountability, we only get to keep our leaders accountable when they are seeking for re-election. But you see, accountability is supposed to be done all through their time in office. So just by also leveraging on civic education, having a platform where we can easily engage young people and also just to empower them, for them to be able to understand their rights and their roles as responsible citizens. We are working with different stakeholders, different organizations that we've already started engaging with, who are very big on civic education. So what we are doing is we've told them we are going to use our platform to be able to disseminate your information, and at the same time we are going to use our data so that we can be able to make more informed decisions. And also when it comes to the technology part of it, one, we are using a 2-factor authentication. You know, that's another layer of security. And also our data is encrypted through transit and also on storage. But right now, with the MOU that we've signed with the European Business Institute of Luxembourg, so the president, Dr. James Mooley, is a lecturer of blockchain. So now we've also started engaging with them just to see how we can be able to leverage on blockchain technology. And the reason why we're doing this is because with the blockchain, one, we are going to decentralize our data, sensitive and personal data. We are going to decentralize it, meaning it's another top-notch layer of security. 2, blockchain uses end-to-end encryption. 3, it uses peer-to-peer protocol. There'll be no third party, and also our users can freely express themselves without having a middleman to be able to control what they're saying. Yeah. And also other thing that we're also leveraging on is AI. So we are building a very powerful machine learning recommendation algorithm, and it's a hybrid. And also with the AI, we're also going to see how we can be able to filter out some of the hate speech, misinformation, inappropriate content. And also using AI, we're also going to simplify our constitution so that people who will want to access our constitution, they can freely do that now on our platform.
Globally, there is a wave of civic action, with the likes of Bangladesh, Bolivia, and Nigeria being the latest countries to replicate the mass action of the citizenry in agitating for good governance and inclusion. Uamuzi hopes to be the platform for this to Kenyans. And that's our startup this week. Very well, then now you have a platform where your MP, your MCA can hear you from. Let's have the tech tip of the week and close the show.
Hi there and welcome to another episode. If you're a content creator or you're planning on becoming one, I have some exciting news. So, Facebook or Meta recently rolled out a major update which rewards you for creating content. So, they recently rolled out monetization features to Kenya. And there are two types. One is in-stream ads, two, Facebook ads on Reels. This is a way to make money by having short ads playing between your videos or at the end of your Facebook Reels. And they have support from many languages, including Swahili. Now, of course, there are some rules for you to be eligible. You need to be at least 18 years of age, have 5,000 or more followers, and have more than 60,000 minutes of total watch time in the last 2 months. And most importantly, your content needs to be original and follow Meta's guidelines. So this is great because imagine this, you're doing what you love, creating amazing videos or captivating reels, and getting paid for it. This isn't just about individual creators, it is about growing our whole creative industry. It is about young people seeing a future in their talents right here at home. The monetization features are not really available yet on Instagram, but this is a great sign for the future. So go check if you're eligible, and to everyone else, let's support our local talent, engage with the content and help them grow. That's it for this week, and see you in the next one.
Now you know what to expect out of a startup incubator, and I hope you do not expect much. That's the point where we leave it at for us here on TECHOVER. Keep being techie, see you on the next one, and may tech live forever.